Good morning, everyone. Well, hello and welcome to our very first webinar. This is the first of what we hopefully will be many more webinars to come on a variety of topics. And it's really come about as a result of our recent owner forum in the Cotswolds, where we were asked to talk about business rate relief. And it was obvious that this was a subject that several owners were interested in. And it felt like a great subject to start on, as we can both share our knowledge and benefit your business at the same time, as well as providing an opportunity for us to answer your questions and discuss other topics with you. So the talk today will be on business rate relief and how you can ensure that you're not paying any more for your property than you need to. So I'm going to talk for about 10 to 15 minutes, after which we'll open the floor to any questions. So if you do have any questions as we go along, please do ask them in the comments section, which is in the bottom right-hand corner of your screen. And Ben from our marketing team is manning it. Once the webinar is finished and we've answered your questions, we'll be making a video recording. So if you have to dash out or want us to go over something again, it will be available afterwards. We'd also be really interested in hearing about any other topics that you'd like us to cover in the future. So if you do have any ideas, please put them in the comments section so that Ben can pick them up after the webinar. We're going to cover a whole range of subjects and from lots of different speakers across the business, so feel free to ask for any topic that you are interested in. And we'll become in touch with you in the next few weeks with a schedule of talks, which will probably start in the autumn. Okay, so let's start thinking about business rates. For many owners, business rate relief can be really confusing, as it's not always 100% clear who is and isn't entitled to it. As a holiday-let owner, you are able to rate your property as self-catering accommodation, which entitles you to receive business rate relief for your property, depending on its size and its overall rateable value. For those with a single, smaller property, which for this instance is around a property that sleeps 12 or less, you are likely to be entitled to some amount of business rate relief. Those whose properties are larger, or if you have more than one holiday cottage, you will probably not qualify for business rate relief. There are some reductions you might be able to receive, but the main majority of it you won't. So, how do you know whether you qualify? Well, in order to qualify for this sort of business relief, there are a number of prerequisites that your property must fulfill. If your property is in England and available to let for 140 days or more a year, it will be rated as a self-catering property and valued for business rates. Amazingly, you don't have to prove that you actually let at all, just that it's available. So who qualifies and gets this small business rate relief? Well, the rateable value has to be less than 15,000, and we will go through this in detail in a minute. You can only have one property, or the rateable value of all your properties can't add up to more than 15,000. And as we have said, if you have more than one, there are other hoops to go through in order to qualify. So let's look at the majority of holiday properties, which in this case we're calling small. I appreciate most of them aren't, but for the business rate purposes, they're described as small. So you've got one single property, then you won't have to pay any business rates at all if the rateable value is £12,000 or less. Now, what does that mean? Well, to give you an example, we have one of our owners has just gone through this exercise with a 5-bedroom house, which sleeps 12 and has approximately 4,500 to 5,000 square feet. So it's a sizable house. And the rateable value has been set at 12,000. So they are going to pay no business rates, no council tax at all. So what about the next size up? the slightly larger properties that are between 12 and 15,000, 15 being the cap. These are done on a sliding scale. So if you're between 12,001 and 15,000, the rate of relief will go down gradually from 100% to 0%. And we've put a couple of examples up on the screen to try and make this a bit clearer. So if you had a rateable value of, say, 13,500, then you would get 50% of your business rates off. If it's under 12,000, it's 100%. If your rateable value is 14,000, you get 33% off, etc., etc. But even if you don't pay business rates, please don't forget you do need to pay for refuse collection and garden waste. And this is around £500 to £600 a year per property. So as you move from council tax to business rates, if that's what you choose to do, then you must make sure that the council keep your bins being collected, because otherwise they will just remove you completely as they would any other business. Okay, so we've now looked at the smallest properties, then the middle-sized properties up to 15,000, and now we're going to look at the large ones. Now, any business, so it may be a multiple of properties, or it might be that you have one very large property, so it's sitting in the 15,000 to 51,000 pounds in size for business rates. There are some small benefits that you can still receive. If it's over 51,000, there's no benefits at all. You'll not qualify for the main part of the business relief, but you will qualify for this small business multiplier, which is somewhere between 48 and 49p per pound. And you'll need to go online and look at the multiplier and put the number in order to get an understanding of what you could achieve. To give you one example, if your properties were rated at, say, 20,000 at 48p a time, you're going to be paying rates of £9,600. Okay, so if you have more than one property, with the first property, if you register the first property and you start with just one property, then that will get full small business rate for the following 12 months. But as soon as you add another one, then all of them have to qualify within the rates. And this is that no property can have more than a rateable value of £2,899. Heaven knows why it's such a weird number, but that's the number. Now, to give you an idea, £2,899 of rateable value is a very small one-bedroom property. So it would only work if you have 3 or 4 grouped together of single properties. I would also just mention that in London, the rates are slightly different. So if you are mixing country properties with London properties, you will need to look at it because they do have a higher banding starting at 28,000, obviously because the properties are more valuable in London. So if you qualify, what's the next stage? Well, the first thing you have to do is to contact your local council and inform them that the property is available to let for more than 140 days and that you want to apply to move from council tax to business rates. Most of the time this is done on council websites, and if you put in business rate relief on their website, you'll find the form that you need to fill in. There were some changes made in 2017 to the evaluation process, and some properties will have lost out as a result of that, but most people that's not going to apply to. So you go on your council website and you complete the form and you deregister for council tax. And it takes around 6 weeks for you to get the confirmation that you have deregistered. Then you have to next apply to the valuation office and apply for business rates. And they will then value your property, and it's up for the 4 things that you can see on your screen: the size, the type of the property, the size of it, the location, and what they call single bed space. Now, single bed space is how many people you can actually sleep, and it's that dictates what level you're at. So if we go back to that example at the beginning, it's a 5-bedroom property that slept 12, and it still came in under the rate, so they got full business relief. Okay, so to recap, because it's super complicated, this, you'll receive business rates if your property is less than 15,000. You'll get no business rates to pay at all if it's under 12,000. And properties between 12,001 and 15,000, you'll get it on a sliding scale. Any business rates you already have, if you add any more properties, will be eligible for the year you're in, and then you'll have to change to the new system. And most of this information you can find if you look on the government website and put in business rate relief. It's about applying to your local council, and you can't backtrack it. So if you've been paying council tax, you will just have to live with where you are and start from wherever you are. Okay, that's it. I've stopped talking, and maybe you can all let me know if there's any comments that you would like me to look at, and I can answer from there. Jamie is asking, is the income from your property a deciding factor on whether or not you can apply for business rate relief and be exempt from council tax? No, it's whether you can qualify for 140 days available for the property, Jamie. It's nothing to do with your how much money you're actually earning from it. Claire's asking me, can you revert to normal rates in the future if the small business rate system changes to a more expensive system? You can at any stage go back to council tax, but you would have to be saying that you're not running a business anymore. Otherwise, they would want you to stay in the system. Amanda's asking me, if I choose to long let, does this affect my business rates at all? Well, this is for self-catering holidays. So if you're long letting, Amanda, this isn't anything to do with that. You would be paying council tax. John is asking me, what if I think that the rateable value is wrong? Can I do anything to be reassessed? It is always possible to ask for it to be reconsidered, but rateable business rates are rarely changed unless they have a huge change like they had in 2017, where they looked at it in detail and changed a lot of people. I'm sure you've all heard in the news about shops trying to get theirs assessed because of falling footfall, but nobody actually is listening to that at the moment. Okay, there's another one coming in from Jane. Sorry, it's just coming up on my screen as I'm reading it. Is there anything more I can do to reduce my business rates? Well, because of the formula, Jane, I'm not sure that you really can, because they're looking at how big it is, the type of property, they will assess it in that way. So I can't comment on any other sort of business rates you have, but I don't think really there's anything you can do, because even if you say move the property from a sleeps 12 to a sleeps 8, if we use the example I gave earlier, they wouldn't necessarily have rated it any lower if they felt the house was of a specific size and had a certain amount of bedrooms. So, you know, not necessarily. I don't think so, really. I'm not sure I can answer that. Okay. Does anybody else have anything else that they would like me to talk about? There was one question that came in before we began, which I can't now see on my screen. Let me just have a quick look at it. Joanna has asked, do you have to register your holiday home for business rates if you intend to keep under 140 days a year available? The answer to that's no. not if you don't want to. You can leave it in the council rates system, but most people find they pay less rates if they do move to the small business rate system, and which is why a lot of owners want to do it. Right, thank you. Oh, there's another one coming in. I'm just reading it. Just bear with me. So Joanna's asking, sorry, bear with me. Somebody else is just asking me a question. Can you obtain a valuation before you deregister? Probably, Joanna. Yes, you must be able to, because it's done on a formula. I would imagine you can. I don't know the answer to that, but you must be able to contact the valuation office because you fill a form in again and ask them to give you an indication before you deregister. So yes, I think you can. Laura's asking me, how do I calculate the rateable value? Well, it's a formula, as I've just explained, to do with the single bed rate that your property. So if you fill in the form, they will probably give you an idea. Robert's asking me, does the council base its rate levels on gross income? No, they don't ask you that question. They ask the size of the property, and rather than anything else, they've obviously got a multiplier that they're already got into their system that they're working on across the country. So it's not to do with gross income. It's to do with the size and the probably the value of the property. Great. Thank you very much. I hope you've all come up with some suggestions of other webinars that we could run for you. And it was really nice speaking to you all this morning. Thank you.